Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And as such, we do a lot of work with bootstrap startups. Obviously, 1 million entrepreneurs cannot be financed, but we do consider them to be worthy of support. This is the 596th roundtable, and the event is being recorded. Every single recording of every single roundtable is available on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1M1M and at Romana. Today's hashtag is 1M1M. These are the call-in instructions. This is a roundtable, not a broadcast. We want you to call in, or you can use your computer audio as well to converse and participate. First, though, we have some scheduled programming. I will put this slide up later on. We're going to start today's session with a conversation with Julien Pham, founder and managing partner of Third Culture Capital, 3CC. What a nice name, Julien. Welcome to the show.
Hi, Sharmana. Thank you.
Where are you dialing from?
So I am actually dialing from New York, but the fund and myself, we're based in Boston.
Okay. All right. Well, let's start by introducing our audience to yourself as well as 3CC.
Oh, great. No, thanks for the opportunity to converse. As the name of my fund indicates, I myself am a third culture kid. And before I explain what Third Culture Capital does, let me explain what a third culture kid is. Third culture individuals are oftentimes children who grow up in a culture that's different from their parents or their passport culture. So oftentimes these are the children of immigrants, the children of diplomats, the children of global executives, missionaries, military, who've kind of lived across the world and don't necessarily have a sense of attachment to necessarily the country they're in or the country that their parents are from. And oftentimes, one would describe their experience as, outside with my friends, I'm one dimension, and as soon as I enter the doorstep of my home, it's a different culture. And so having this fluid culture allows for one to grow up being very open-minded, very adaptable, very resilient, and these are incredible skill sets for entrepreneurs. So my own journey is, as the child of Vietnamese refugees post-war. We moved to France when I was 3 years old. Spent my formative years there, and then was sent to the U.S. To the West Coast to study English when I was 14. And I've been in the U.S. for 30 plus years and went into medicine. I've had a very kind of interesting journey in which, oftentimes as the son of immigrants, you're pushed to work and become an engineer or physician or things like that. And so I probably made my parents proud when I decided to go into medicine and became a physician at a very prestigious institution. But then I caught the entrepreneurial bug about 10 years ago and had to explain to my family what exactly entrepreneurship was. But I started the first company, which has since been acquired, and then joined also another company in the biotech space that we took public. And armed with those two experiences, I decided to launch my fund about 2 years ago called Third Culture Capital, because we want to back founders who don't fit the mold. We believe that third culture founders have unique skill sets because of their unique lived journeys that really allows them to think outside the box and really be creative and resourceful and thoughtful about how to bring kind of equity into healthcare delivery globally. And so that's the thesis of our fund. We are at the intersection of culture and care delivery.
And the two startups that you did were both in the healthcare space, yeah? You said biotech was the second one, and the first one was also health.
Yes, absolutely. Sorry, I interrupted you. Um, they were, I think I am a firm believer that, uh, you need to be creative within kind of areas where you have domain expertise. I've been a physician for, 15, 20 years or so. Have had plenty of time to feel frustrated about the things that don't work,
Yeah,
in that industry. And so really the reason why I got involved with those companies because I wanted to improve the system and find solutions. So my first company was a company called Rubicon MD, which was a digital health startup. It was an e-consult platform that connected primary care physicians with specialists. And my second company was a company called Genprex, which was a gene therapy biotech for lung cancer.
all right. So does Third Culture Capital also have a healthcare focus then?
Absolutely. We invest across multiple sectors, so we are fairly sector agnostic. We will do early stage investments, and by early stage, I mean seed and pre-seed rounds in life sciences, in digital health, in tech-enabled services. We'll do devices, we'll do diagnostics, we'll look at things, but at the core, we really want to invest in solutions that are going to improve the human condition through care delivery. And for us, what that means is what we call the quadruple aim. So the quadruple aim is number one, does this solution improve outcomes for patients?
Mm-hmm.
Number two, does this solution reduce the cost of care delivery at the systems level? Number three and number four are, does this solution improve the experience of care for patients, but also for providers? And if a solution, regardless of its modality, whether it's AI, machine learning, or
Yeah,
drug delivery or whatnot, if that solution can meet those criteria, it is something that we would take a look at. And because I and my investment advisory committee are all clinicians, we look at things in a very nuanced way to try to wrap our heads around what that solution can mean and whether we think that that solution can actually improve care delivery at scale.
got it. And how big is the fund?
So we're raising a $20 million fund. We've done a first closing early last year in 2021 that has allowed us to invest in 8 companies so far. About 70-75% of those have been software driven solutions, and the other 2 or 3 companies have been what I call substrate. And by substrate, we mean biology or data. And
Okay.
so we are continuing to raise capital in order to invest in a portfolio of about 25 companies.
And you said seed and pre-seed. What size checks are you writing?
So the typical check we'd like to start with is 250,000, and we'll go up to about 1 million or so. We have the opportunity to partner with some of our LPs in order to to invest in kind of via larger checks. But generally speaking, we feel that oftentimes the types of entrepreneurs that we want to back, tend to be underfunded and overlooked, right? These are women founders, people of color, immigrant founders. And so giving them access to capital through small checks to get them going at an early stage is an important part of what 3CC does.
Do they all need to be located in the United States?
We are global by design, given the name of the fund, Third Culture. Yes, from a practical standpoint, it helps if a company is established in the US, but we've already, for example, made an investment in a company in France. We have looked at companies in Indonesia, in Africa, in Vietnam, and other countries, and are quite open to support those entrepreneurs.
Very good. And let's now double click down on some of the companies that you've invested in 8 companies already. So pick a few and take us through what they are. And in particular, I want to understand how you found them or how they found you, and what is it about those companies specifically that made you write the checks?
Yes, absolutely. Um, so one company, one of the first companies, if not the first company that we invested in, was a company called Intus Care. The founder actually took a break from his undergraduate studies at Brown University with a few of his classmates to start a company that would look at predictive analytics for senior care. And he looked specifically at a small kind of beachhead market within senior care that very few people, have tried to address. What what I liked about the company and about the founder is number one, the founders were young, right? They were first-time entrepreneurs, but and I oftentimes joke with Robbie, who's the CEO. He was 22 years old at the time, and I used to tell him that, you are the only 22-year-old I know who's so passionate about senior care. And I think if you dig a little bit deeper, you really understand the reason why, right? And this is a little bit what 3CC does well, is to understand the the unique journey of the founder and what drives them to do what they're doing. Robbie grew up in a family where his mom was an executive within that senior care space, and through dinner talks and conversation, that's all he heard about. So kind of that kind of got infused in his head, and he became very passionate. I wouldn't say necessarily an expert, but he understood the vocabulary
Yeah.
and the lingo of the space. And as he kind of grew up and went to school and kind of gained that entrepreneurial excitement, he decided that he wanted to apply his energy and his passion to try to solve the problem that his mom had started, exploring, decades ago. And so he brought a different way of thinking, using technology to simplify the process, to operationalize the process. So what IntusCare does is it collects streams of data from kind of the operational data stream to clinical data streams to financial data streams for some of these senior community clinics, in a way. That's the easy way to describe that, and tries to find care pathways that will improve outcomes for these seniors and would kind of reduce the cost of care, such as avoiding rehospitalizations after discharge, and et cetera, et cetera. And the idea of that particular niche market of senior care, the PACE model, is that the goal is to keep seniors within the community, right? And as you know, the more functional an elderly person is, the more likely they will live longer, right? If you put them in a nursing home, they'll be depressed, et cetera, et cetera. So the whole idea of the PACE model is that. And culturally speaking, I truly believe in that. And that's something that we see in other countries that has worked well. And so I believe that this is something that should exist in America if the right kind of parameters were there. And so I really believed in the mission and the dream that Robbie wanted to pursue. And so we backed him, and we invested in an early stage at a valuation of 5 million or so. We wrote a small check, and within 18 months, he has raised a Series A with Deerfield as the lead investor at a valuation that is multiples of what we came in, and that in a very short amount of time. So
What was in the
that's
company when they came to you? What was in the company? Did you
Say that again.
from the concept, or was there something already in place?
There was no. Usually we like it a little bit beyond concept. The value that we add to some of these early stage companies. Sometimes they may be pre-revenue, and sometimes they may be getting early revenue. is truly through our network and our know-how. We like to help them establish an advisory board with some of the healthcare insiders that are within our ecosystem. We like to make introductions to them to the right people so that they can scale quickly and gain some learnings about the space. So that company was generating a little bit of revenue. They had a product that they were improving. But I think that what Robbie had that was unique is an understanding of a very narrow beachhead market, and where he had an ability to establish rapport and relationships with some of these decision makers in that space. And we felt that that was an incredible advantage, and so that's what convinced us to invest.
And how did Robbie find you, or you found Robbie?
It's oftentimes serendipity, right? It's hard to quantify how our network is, but as a third culture individual, I have a very unique network that is not just healthcare providers, physicians and whatnot, but they're, people from various walks of life, and they know that I'm very passionate about healthcare and that I invest in healthcare, and that's how my deal flow comes. This particular connection was uh, um, through a consultant of theirs who, frankly, didn't know me very well, but kind of perhaps knew about our reputation and made the intro and uh,
Well, I
yeah.
imagine just listening to you that you are probably reasonably well networked in the New England healthcare startup community and the investment community and the ecosystem around that. So kind of word gets around.
Yeah, and I'd like to think so, Now, having been an entrepreneur myself, I think it's so wonderful when you are able um, to to raise what I call smart capital, right? To raise
Absolutely.
money from angel investors or early stage investors who truly understand your space, because that's incredible external validation. And we want to be able to build that kind of reputation as a clinically driven um, investment firm, so that when early stage companies come to us, they're like, wow, yes, we would take a check, but holy cow, what an incredible network of healthcare insiders. And, we can leverage your network and learn from you and have, someone from your network be an advisor or a board member. Like, we want to be known as that kind of firm.
What is your analysis of the healthcare space? Where are the big opportunities? Like if you want to kind of provide your wish list out here to our community of entrepreneurs, asking for, like, I want to invest in this, I want to invest in that, and these are the ones I think that are the opportunities of the future, the trends of the future. What would some of those be?
Yeah, I have a very meta overview of healthcare, just because I understand kind of the nuances of it. But I'll say that they are. I think we live in an era where technology comes in easy, right? Yes, we can't yet send people to Mars and etc. We can't do teleportation or anything like that. But I mean, we've made some great achievements in technology, AI, machine learning, etc. over the past decade, and um, being able to apply this technology in order to accelerate, to catalyze how we provide care is going to transform our societies. And so I think the future of healthcare is going to be at the convergence of multiple disciplines, right? I think we used to, and if you look at it, even more traditional investment firms, when they say, "Oh yeah, we are a life sciences firm," or "We are a health tech firm," et cetera, et cetera, they I think they're missing out on an opportunity to really look at technologies that are at the convergence of some of these disciplines and sectors.
Mhm.
Over the past few years, I've heard more and more of this notion of tech bio, as opposed to biotech, right? Where the tech comes first. And we've invested in a company like that where they are using AI machine learning for drug discovery. And so the anecdote that I often tell is if you've got two companies coming to you that are saying, yes, we use AI machine learning for drug discovery. If on one company, the founders are ex-Google, ex-Amazon, ex-Silicon Valley algorithm gurus who are like, we know how to do this. We've done it before. We now want to do it in an area that is going to have an impact on society or in the world. And therefore,
Mm-hmm.
we're going to do that for drug discovery. That's a tech company, right? And if you've got a group of, Boston biotech veterans who are like, listen, we've been doing this for 30 years. We're so frustrated with the pace in which this does. There've got to be better tools to be able to get a drug out there to patients faster. Why don't we use AI machine learning? That's a biotech company, right? And not a
Mm-hmm.
tech bio company. But at the end, they're doing the same thing. They're leveraging technology in order to accelerate drug discovery and putting a drug out there. So for us, we're looking at the intersection of all of these sectors and disciplines. And I think that's going to be the future of healthcare. One particular area that we are very interested in is digital therapeutics, or this notion that you can prescribe an app that can be reimbursed in the same way that, similar to how, a drug would be reimbursed if a physician were to prescribe it. There are obviously many challenges to that because, we're just figuring out how to do that commercially from a
Mm-hmm.
reimbursement standpoint, but from a regulatory standpoint as well. So it's an area that we're very bullish on.
And what is your analysis of the whole field of gene editing and DNA testing and all the genetic field?
Yeah, I'm very interested in that. My prior company, Genprex, was a gene therapy for lung cancer, and I think there's several ways that you can use cell and gene therapy. And again, now we've seen the evolution of that and how CRISPR has come in and influenced how we can design and put some of these cell and gene therapies out there. But the challenge there, I think, remains not so much in the ideation and the biology behind the ideas, but in the execution and how can you produce some of the cell and gene therapy in a cost-efficient way. And the cost of it, right? We've seen, a couple gene therapies out there, for eye diseases, for example, but when they cost, 750,000 a treatment, that's a lot of money for a treatment. And so I think the field needs some maturation still, but there's so many companies with some wonderful pipelines out there that I think that in a decade of less, we're going to see kind of more options out there for patients.
Julia, I want to ask one last question before we switch to the entrepreneur pitch session. What is the progression of science into an entrepreneurship format? So a lot of these things need many years of scientific research before they can come in and become a company. So how do you see that process evolving? When you're seeing these companies, it's not so simple for a team of computer scientists to just say, "Oh, we're going to now do drug discovery." Well, it's not that simple.
Yeah. Yeah, I completely agree. I love to talk about this. And if there was a way to, have a class to discuss this, then I think that would be super interesting. Um, I've put in a lot of thought about whether entrepreneurship is something that can be taught. There's just so much serendipity in how you build a company. I think that ultimately a good entrepreneur, it's a mindset, it's a personality. It's really about someone who, has this propensity for building and taking the risk to build, dropping everything, quitting a job that is well paying because they have this absolute passion and confidence that they can make something work, right? That's what
Yeah.
it takes. And as far as how ideas get translated, I mean, in biology and life science, the notion of translational research has existed for decades, right? It's, how do you go from bench to bedside? And so ideas are easy. Biology, you can figure out, you can make work. And there are so many steps in between in order to get that biology to scale it up and to go from the petri dish to animals, which are in a way kind of an artificial model, right? I mean, we can cure cancer in mice, yeah, but the same drug you put in humans, it doesn't do the same. So, figuring out the path from cells to humans, is a convoluted journey, and it takes a team, and it really takes dedication to do that. And it does take a little bit of luck. I think if you hear the story behind Moderna, that has completely transformed how we, you know, our societies and the world. It's a serendipitous moment of people bumping into each other with an idea and saying, you know what, like maybe this works. This is completely like this goes against the dogma of biology as it is taught in textbooks. But if I see it with my own eyes and it works, and we are all scientists here, and we'll do the tests that we need, the experiments that we need to do to refute this idea and be skeptical about this idea. But each time this idea persists, then you know that you're onto something, and that's kind of taking that to and scaling it to the next hundreds of thousands of steps with the right people around you is what makes ideas into concrete solutions.
So what is the synthesis of what you said when it comes to your own investment decisions? How far along does something need to be for you? Digital health is a little bit different, right? When it's workflow automation or data for managing patient welfare, that falls more in the healthcare IT space. But when it comes to science driving drug discovery and all of that stuff, it's a whole different ballgame, right?
Yeah, no, absolutely. We are an opportunistic fund, right? The check sizes that we write for one solution will be different from the check sizes for another solution. We have to be stage appropriate, funding appropriate, and we just need to understand time horizons for the solutions. Obviously, a health IT solution may have an exit much sooner than a biotech deal. So, first and foremost, we are people focused. We are founder focused. We believe that genius knows no border, right? We want to see third culture individuals and their unique ways of thinking and how uniquely qualified they are. We want them to be able to make decisions that will impact societies across the globe. And whether those solutions exist in a predefined silo or whether they are a little bit unique and outside the box, we would favor things that are a little bit contrarian, because those are the ones that potentially could transform care delivery.
But when you have a situation where there is many years of research ahead still, I mean, many rounds of clinical trials, but even before that, many rounds of research still unproven, would you invest in that?
We have to be thoughtful. We have to diligence it appropriately. At the end of the day, structurally, as a VC fund, we need to see that there's a potential for an exit within a predetermined amount of time, right? Like the lifetime of a fund is about 10 years. Yes. So, if I have a 4-year investment period and I'm on year 3.5, I'm very unlikely to invest in an early biotech idea that will take 15 years or so for an exit, right? And so the timing of the investment, there's some external factors and boundaries and parameters that we have to look into. So that's why we can only be opportunistic. and see kind of what are the best ideas and the best founders and then people that we can truly add value to in order to get them to successfully build something and exit something within a period of time.
And in biotech, there is also, in life sciences, there's also the phenomenon of the drug companies buying companies, startups that are not all the way done, but are at certain earlier stages, but have some amount of proof points, and they tend to also buy companies, early stage companies, relatively early stage companies.
Yes.
So.
Yeah.
All right. Well, Julien, thank you very much for coming. It was very interesting talking to you, and we wish you all the best with your firm.
Yeah. Thank you, Sramana. All right. Take care. Bye. Yeah.
Folks, we're going to switch to the entrepreneur pitch session. Remember, this is a safe working session. We're completely on your side. And, don't be defensive. This is a brainstorming session about your strategy. How can you accelerate? And if you disagree with my feedback, that's okay. It's your venture. You get to do whatever you want to do. Just listen and see what you want to do with the feedback. All right, Brett Maxfield, Afterlife. Brett, please unmute your line.
Good morning, everyone. Thank you
morning.
for the previous interview. That was very interesting. I myself am very diverse. I was born in Caracas, Venezuela, and moved here when I was 5, so I've had a very different experience than most people in life. Afterlife, to give you it in a nutshell, an idea that I came up with during COVID. Next slide, please. As you see, obviously there was a big spike in death, and thus people started thinking about death. I started thinking about death. Next slide, please. And my father died when I was 18 years old, and he was 74, and I'm 51 today. So the origin of the idea was 5 messages pre-recorded for your loved ones after you die that are time released by an executor. Now, I didn't come up with this completely on my own. I have a friend who's a outsourced CIO, and he had a client or a prospective client who had an idea of doing wills and trusts using pre-recorded videos. And I heard that and I said, having been an attorney for 22 years until recently, that is the worst idea I've ever thought of in my life, the idea of trying to do wills and trusts through videos. But I love the idea of pre-recorded videos for nothing but the passing forward of your love and reminding them of your relationship after you die. I would love to have videos. Next slide, please. I'd love to have videos of my father. Sorry, there's videos here just justifying, slides justifying the concepts that I've been describing. Next slide. And I'm also incredibly nervous. Let me pause for a second. Okay. So I can get across my idea, because I have a 13-year-old son, and he asked me when we walked the dog 2 days ago what I was doing this week, and I said, well, I'm pitching this idea. Well, what is it, Dad? He's 13, so what is it? Well, there are 5 videos. You pay $100, and your loved one gets them time released after you die. And he says, well, okay, well, that's cool. Well, how do you make money on that? Well, it's $100. Okay, but who's going to buy that? Okay, well, we know, sorry, let's see, move, next slide. Next slide, let's see here. Okay, so we know the world population is going to be coming up and up and up, and people are going to be dying exponentially in accordance with the death rate and birth rate, so they're correlated. Basically, there are five, and I'm next slide, please. Oh, wait a second. I apologize. So my son is asking me, how can we guarantee that this is going to be a success? I said, well, son, there's 5 different verticals. First of all, there's 100 million active full-term life insurance policies, 100 million among the English-speaking people of the world. And all we need, according to the crossing of the chasm thesis, is 1%. All we're guaranteed is 1 to 3% of early adopters. And I can buy those email lists, or I can become partners with those life insurance companies. But I can basically guarantee mathematically that we're going to get 1% of 100 million at $100. And that is just one of 5 major verticals. But just on that first vertical of the life insurance policy holders, and he said, well, why the life insurance policy holders, Dad? Because these are people that are thinking about what's going to happen after their death, and they are spending money already to give to someone after they die. So we know for sure they're interested in after death issues. Sorry, I'm taking a drink of water. The
So,
next,
Brett,
go
let
ahead.
me help you a little bit. How do you propose to market this? You said something about,
Yes.
I understand what you're trying to do. I don't think insurance companies are going to market this for you. So you're going to need to, I think this is a B2C business.
Right. I can buy the email lists of the people who have those policies.
Okay.
And I can email market to them. Ideally, obviously, it would be with the insurance company doing it for me, but I can buy those email lists and do it through email marketing. Obviously, we're talking about I need 1% of 100 million. That means I need 100 million life insurance policy holder emails, which is an expensive thing to buy. But I don't need, to start with all of those emails. Obviously, it's a process.
Do you have any validation on what you're trying to do here?
As far as A/B testing, or I'm not sure what you mean. Everyone I've talked to about it loves it. They're like, I can't believe this doesn't already exist.
Okay, so what brings you here? What are you looking for?
I'm trying to raise $500,000 on a 10 mil valuation.
That is not going to happen. You don't have anything. It's a concept. People don't fund concepts. So
I
you're going to
actually have a demo built, a demo version
a
of the
demo is
software.
not going to be able to help you raise $500,000. This is a fairly straightforward concept. I think this concept has come up many times before. I've seen this concept before. So concept-wise, it's not that new. But you're going to have to show some executions, do some bootstrapping, and get this business to show potential for becoming a fast growth, investment-worthy business, and then you can raise money.
Well, it's kind of a chicken and the egg here, because the product that I can build is not, it's not sophisticated enough to get the interest of the insurance companies. Because what I would ideally like this product to be is a hybrid using blockchain, so that, because basically I'm offering you a service. Yes.
Brett, every startup is in a chicken and egg situation. The whole game of navigating an early stage startup is managing the chicken and egg situation. So you're not new. You are part of the global community of millions of aspiring entrepreneurs who have to navigate the chicken and egg. So figure out how you can get to a minimum viable product. Learn. If you decide you want to learn from 1 million by 1 million, you can learn from 1 million by 1 million, but there are ways to learn how to put one foot before the other and how to manage that chicken and egg. But you have to, please do not assume that you can raise $500,000 on a concept right now. That's not going to happen. Then nothing will get off the ground ever if you assume that. Okay?
Yeah.
All right. Javed Christi is next, and Charles, Missouri. Javed?
Yeah, I'm here. Can you hear me?
Please tell
Hi,
us what you're
Shravana.
working.
Hi, Shravana. Can you guys hear me?
Yeah, can you speak up a little bit, please, louder?
Okay, I'm so sorry. Let me. So good morning, everyone. Shravana and Maureen, thank you. And Brett too. Well, I'm originally from India, and I've been in States for over 22 years now. So a couple of years back, I started my LLC in Missouri. That's where I live, St. Louis, Missouri. And one of the products, actually, I know you're going to kill me for I'm entering a traditional market, but I thought, bringing some innovation into some existing product and making it accessible to even the smallest of businesses. That's the goal here. And the market size, as you'll see in the slides, in the next few slides, it's huge. So even if you get a small piece of the pie, we might still be able to make it. And the good part is that, we have, this is a finished product. We just completed it this summer. And it's basically a POS system. And the thing we're adding to it is making high-end technologies like kitchen display systems, token display systems, accessible to the smallest of businesses at an affordable price. The other thing that we're integrating, probably the next slide, most of the, we researched close to 50 products around the world, including India and everywhere else in the market, in different continents. And everything is part of this product. So most of the features that any of the top products in the world offers, it's already there. The thing we're adding to it is basically the kind of the ERP version of that, wherein you can manage a bunch of chains, your inventory around the, in your warehouses and stores and whatnot, and your factories all at once. So that's the flavor we're adding, because there is, I was in India and then I'm still here. And then there isn't a product like that. I saw businesses were craving for something like this. So that's where, so if we have a product that does all of that, so I thought it would really do good. Plus, if we get invested, then we can invest in technologies, bringing in payment methods and things like that.
Javed, let me start asking you some questions. First and foremost, as you know very well, it is a very, very, very crowded market.
I totally agree.
So if I put my investor hat on, my first reaction is I am not going to touch this market with a 10-foot pole. It's too crowded.
True.
And that is going to be the first reaction of every single investor out there. What is your response to that?
My response is, I mentioned two things. A is, it is already out there, and we have, traction around the world. And we've seen the responses of people, who've been in the industry for over 30 years, and they're loving it. The ease of use.
How many customers do you have? How many paying customers do you have?
It's still in the tens and 20s, not a whole lot, but we have some revenues. And then, satisfying businesses that have like dine-ins, takeaways, deliveries, sweet shops, bakeries, all in one, and running it successfully for the last few months. That's pretty big actually for something, I'm doing it on my own. So with a small team. And plus B, the flavor I talked about, the enterprise version, that's something new. I don't think, unless you shell out a lot of money and go for a higher version of ERP, you're not going to get anything in that space. There's nothing actually, at least in the food industry, there's nothing. B is the long-term goal is like POS market. As you saw in the previous slides, it's huge. It's not just a restaurant. And the way we've architected it is we can easily diversify into a simple POS market, retailing, even pharmaceuticals. That's B. Third thing that is kind of that not many players have gone into is we have three variants: the cloud, of course, then we have a standalone, and the third and most liked one so far based on our feedback with businesses is the hybrid. So we give a box which is pre-configured, and then even without internet, and so it can work anywhere in the world. B is it syncs data, high level data, like if you're an owner of a restaurant or restaurant chain, you can be somewhere in a different continent and you can get all your feeds. You don't even have to be there. So while your restaurant is doing the business without internet, so you need periodic feeds, periodic bouts of internet, and then you're almost watching whatever is happening there. So this helps management. That's the innovation we already brought. It's not, it's already working. So we want to take it far.
Javed, second.
Yes.
To you, my advice is exactly the same as I just gave Brett.
Okay.
You're going to need to bootstrap to a point where you can credibly say that if we put in, let's say we're going to raise $500,000 or $1 million, we put in $500,000 or $1 million, I'm going to do this, and that is going to produce $5 million worth of revenue or $10 million worth of revenue.
Sure.
So, and in a certain time frame, you put a trajectory of revenue here without, nobody's going to believe this trajectory because there's nothing in your pitch that explains anything about the go-to-market strategy that allows you to deliver these kinds of numbers. Just having features in the product doesn't deliver numbers like this.
Well, one big reason we need money is marketing, because I've been doing it.
I can't hear you. Please speak up.
Yeah, sorry. Listen, the main reason we need money is basically marketing itself.
I cannot hear you.
I'm so sorry. Can you hear me now?
Better, yeah.
Okay, I was just saying that the main reason we need money is basically to invest in marketing. That's a part, we're weak.
This
because
is an answer that doesn't work. This answer doesn't work.
Mm-hmm.
Because the main reason I want money is to invest in marketing is a 30,000-foot answer. If you told me that I figured out how to acquire customers, I do Google PPC ads and I spend, I don't know, let's say $2 per customer acquisition, and the lifetime customer value is $635. And if you invest $1 million with me, I will invest that in marketing, in Google PPC, and this is how I'm going to build the business. That is an answer that an investor can work with. Sure. The main reason I need money is to figure out how, is to spend in marketing is an answer that no investor is going to accept. So what I'm saying to you is figure out the granular details of how to market and figure out the unit economics of that marketing. How much money do you put in to acquire each customer? What is the customer lifetime value? And if that, and the sales cycle, and if that is a compelling number, then there's a possibility that investors would invest.
Exactly. Well, I can answer some of it outright. I know, that slide might be missing. On an average, what I've seen is based on the research. I've decided, like, even in a place like US, $50 a month is completely affordable. Something small, even a mom and pop restaurant, giving them tools to manage, having an online portal, having an online ordering system, having an inventory management system, having all the tools that are required for takeaways, dine-in, or even delivery tracking in one software for $50 subscription. And it can go up to $100 depending on that. That's something that's totally realistic. And if you say even with a small traction, building partnerships in different places, that's where because I can't travel without money, build partnerships. And like you said, investing in Google ads or campaigns, email campaigns, and even
No one is
LinkedIn.
going to give you money to experiment.
True.
Given the state of this market, given the fact that you're going into a market that is very, very crowded and quite saturated, nobody's going to give you money to experiment. You have to do your experimentation on your own dime, figure out, can you actually get into companies, get into restaurants affordably with a attractive unit economics, and then there's a possibility of money. Otherwise, do a bootstrap business. That's my answer, that's my feedback. And by the way, folks, there is nothing wrong with bootstrap businesses. To be able to raise money, you need a graph like what you have up here, the Efeedo graph. You have to go from, in 5 to 7 years, you have to go from $0 to $100 million. That is not an easy thing to do. But if you're running a bootstrap business, you can take 5 years to go from $0 to $5 million or $0 to $1 million, and nobody is criticizing you for that because it's your business and you can do whatever you want. Whatever pace you want to progress in is fine. So please don't be obsessed with the idea that you have to fit into this very kind of high growth trajectory of hockey stick kinds of businesses. Unless you have the characteristics of a hockey stick kind of business, you will not be able to raise venture capital. And that is just the reality of this market. So don't assume that somebody is going to give you a big check and then you can go back there and start experimenting with how to market and so forth. That doesn't happen in this industry. It does not happen. So accept that and figure out how to bootstrap, figure out how to put one foot before the other. If you need help, and if you decide you want that help from 1 million by 1 million, get that help from 1 million by 1 million. We are happy to help you with that. We are particularly committed to helping the bootstrap startups. And that's just the way the industry works. So let me explain to you how to use 1M if you decide that that's what you want to use to do your learning. In the meantime, if you like what we do here, as you see, I give you unvarnished feedback. I'm not trying to sugarcoat and tell you something that you want to hear. I'm telling you what you need to hear. If you like that approach, let other people know about 1 million by 1 million. Everything is at 1mby1m.com. You can start learning from the blog series. The Entrepreneur Journeys book series is available on Amazon. You can learn from that. You can come to these roundtables every week. You can pitch for free just once at one of the free roundtables. If you're part of the premium program, you can come talk to me every week. But these free roundtables, you will have one shot at pitching to me. But you can come and listen as many times as you want. The full acceleration program is 1M Premium. You get extensive methodology guidance. You have a very deep curriculum. To the extent what you're looking for is within our network, you get help with business development, potential customers, channel partners, etc. You get extensive strategy consulting on a weekly basis. We have private roundtables where I meet with entrepreneurs. Wherever you have questions, you can come and talk to me. When you are ready, if you are ready, you can also get financing help. We have an extensive network of many hundred investors that we work with, and we make those introductions based on what you need and what you're looking for. The self-assessment on our website is a set of due diligence questions that investors would ask you. You can take a look at that. It's helpful to know what kinds of questions you need to answer. There is a free bootstrapping course on the 1M1M website, on the blog. I've pinned to the top. I strongly recommend you do this course. It's less than 1 hour long, and it's very helpful to understand how the industry works. Another body of learning material that I'll point you to is our Udemy courses. So there are 31 Udemy courses that we have released so far, and you can definitely learn from those, and you'll learn a lot about the 1M methodology by going through the case studies in the Udemy courses. They're very, very inexpensive. And 1M Basic is our full curriculum, available at $99 a month. You can also use that to learn. Whatever works for you, whatever price point works, method works, is okay. But these are the resources from 1M. Go dig around on the website, go dig around in Udemy and see how you want to learn, but you have to learn. And that's part of the first-time entrepreneur's journey, is an enormous amount of learning. Our curriculum is described in a lot of detail on the website. It is a case study-based curriculum. You get to learn from people who have done it before. And the investor introduction policy is also available on the website. Our philosophy is bootstrap first, raise money later. Do not go to investors as beggars, go as kings. And the methodology is lean, capital efficient, bootstrap startup. That is all. We have one more roundtable this year, and then in January we have two. No. Just one in January. January 26th, we do not have a roundtable, Maureen. And that is all for today. Do you have any questions? I'll be happy to answer questions. Anybody?
Not at the
Yes,
moment.
no? Yes, go
Not
ahead.
at the moment. Probably, might do it offline later. Not at the moment.
Okay, great. All
Thank
right,
you so much.
folks, let me, if you have questions offline about the program, the contact person for that is Irina Patterson. Her email is irina@1mby1m.com. Please contact her and she'll be happy to answer questions about the program. I don't answer questions about the program outside of these roundtables. All right?
Good. Thank you so much, Ramana.
You're very welcome. All right, folks, we're adjourning for now. I'll see you next week. Actually, not next week, in December. Next week is Thanksgiving. So happy Thanksgiving, everybody. Take care.
Thank you.
Bye.